No better guest to do this panel than Shri Sanjay Kumar Agarwal. And Mr. Agarwal, thank you so much for taking the time out and being with us here.
Thank you, Niraj.
Well, you know, the question that comes to mind is, ye dil mange more, and what more can come in? But you would have heard the first panel out here, and obviously there is a lot of conversation, debate, arguments, and discussions around whether this is the best form of ushering in GST 2.0, or are there some chinks in the armor that can be resolved or conversed upon? What are your thoughts here? Because you would have received a lot of feedback from all parties concerned.
Yeah, let me begin with what was the philosophy behind this entire reform. In fact, GST has completed 8 years of its journey. GST as a tax system has stabilized, and the revenue growth from GST was quite robust. In fact, last year, total GST collection was to the tune of 22 lakh crore. So this is the right time to carry out this transformational next generation reforms. And in this exercise, whatever was being criticized about GST, that it has led to a lot of complexity, and there is uncertainty and instability in the mind of taxpayers because of the many disputes which were arising because of multiple rates, 5%, 8%, 5%, 12%, 18%, or 28%. So it was thought that simplification, yes, is required, and therefore the thought was to bring one standard rate and one merit rate. Apart from that, a lot of process reforms have been carried out in it. And it's a journey. In fact, on rate part, a lot of rationalization has been done. Goods have been put either on 18% or on 5%, depending upon the merit of the goods. As far as processes are concerned, the two processes where every taxpayer is involved is first to come into the GST ecosystem, they have to take the registration. And on registration, we were receiving a lot of complaints about that delays in registration. So it was thought that in GST process, the registration process was tightened because of the entry of a lot of fake entities who were there to pass on fake ITC. So it was thought that entities which are not concerned with passing of ITC were issuing mostly B2C invoices. Why in their cases cannot be a simplified registration process? That was a thought to bring a very simplified GST registration scheme, and where on the basis of their opting for not passing on more than 2.5 lakh as per month as GST, ITC. So they are granted a simplified registration within 3 working days by the system automatically. Similarly, processes have been simplified for granting the refunds. But lot more is in pipeline on the processes front. On rates, I will not say, because rates, we need stability. That was one of the major asks of the industry. So, but on processes, yeah, a lot more things are in pipeline on return filing, so that the mismatches may not happen. And because if a mismatch happens, then naturally to resolve that mismatch, a lot of work is to be done, which leads to compliance burden on taxpayers. So that is next in pipeline.
I would like to ask, sir, that you rightly mentioned about the revenue. This rate cut would have some impact on the revenue collection, at least for the near term. Is there any estimates here, and how confident are you to meeting the budget estimates?
Shrimi, on this, I would like to mention that a lot of estimates are coming. And as far we are concerned, our estimate is 48,000 crores. On the basis of consumption pattern in 2023-24, for which the complete data is available. But it is very difficult to estimate exact revenue implication because of the complexity which is involved when the rates are cut across the board. So it is difficult to say, but I would like to mention, whenever rate cut happens, it leads to more consumption. And if there is more consumption, because this, whether it is 48,000 or maybe some other figure, it remains in the hands of people. And when it is in the hands of people, they will spend it. That will lead to more consumption and further stimulus to GST collections. But one important thing is there. the benefit of these rate cuts should be passed on to the last ultimate consumer. Then only the money will come in his hand. That will lead to consumption growth. So it is very important that the benefits are passed on by the industry to the common man.
But how will you ensure that? Because a lot of skepticism around that, whether the end consumer will get the rate cut benefit or not. Also, will there any plan of reviving the anti-profiteering to deal with these issues?
So starting with the anti-profiteering provisions in GST law, the provisions are there, and when the GST was introduced in 2017, rate cuts have happened in 2017, 18, 19. And we have found that not many complaints have been filed under anti-profiteering provisions of GST law. So, and the amount involved was also not very big. So that gives us confidence that this time also the benefits will be passed on to the ultimate consumer. But what measures the government is taking to ensure that it is getting passed on to the ultimate consumer, I would like to mention that we are doing the price monitoring. So pre-cut and post-cut. So we have already instructed our field formations to take the data, and so that we can analyze whether these cuts are being passed on to the ultimate consumer or not. In fact, you might have also seen that in the print media, full page advertisement have happened from the industry segments where the cuts have happened, and they have pledged to pass on these cuts benefit to the ultimate consumers. So that again gives us more confidence that these cuts will be passed on to the ultimate consumer, and that will lead to increase in domestic consumption and will lead to better revenue growth.
Sir, I'm supposing that by this you are saying that you are fairly confident that there will not be any mishaps around anti-profiteering, etc. because of this, so that's taken on board. The feedback that we got from some of the companies that we were talking to outside was that there is still some debate around the inventory and the treatment of inventory in this transition period. Maybe they want some more time. Maybe some industry bodies might be saying we do not need time. Maybe when the GST was announced, it should have come into effect not from September 22nd, but from September 5th. Any thoughts on that?
Yes, I would like to say that it was the industry's demand, because when the Honorable Prime Minister made that announcement on 15th of August, and there was quite an expectation from everyone that there will be GST rate cuts. And after that, we started receiving representation from trade that this exercise may be completed quickly, because that was leading to people postponing their purchases. So it was the industry demand, and that therefore the GST Council meeting was preponed, and a decision was taken by GST Council, made their recommendations so that this effect can take place in the minimum possible time. So it will now be from 22nd September. Now, regarding the issue which you have mentioned about the stocks which are in the supply chain. Yes. So in such cases, actually this is not the first time the rate cut has happened. In past also rate cuts have happened. And in the supply chain, at whatever rate GST has been paid, that entity in supply chain is entitled to take full ITC. And when they further supply it, then in that case, naturally there is some value addition by them. Those are the margins and certain value addition if it happens. Then in the monthly returns, they have to make the payment, GST payment. So they make the payment either by utilizing the ITC, or the balance portion is paid by them in cash in their monthly returns. Now what will happen that if ITC availability is more, they may make the payment from ITC. So the cash payment liability will get reduced to that extent during the transition period. But I don't see any kind of problem, because people keep on talking about that their credit notes will have to be issued, but I don't think that will be a case, because this benefit will get passed on.
Mm-hmm. And just a follow-up question on that, as we all know that rate cut is across the auto sector, in the small category, in the luxury segment. But one issue is concerning it, especially for the auto dealers, is about accumulation of compensation cess. because that will go lapse after September 22nd. So is there a mechanism in work? Are you considering that issue? How they are going to recover that, unsold credit on the compensation set, sir? Any mechanism there?
Yeah, you have raised a very pertinent issue. That concern is being flagged, and we keep on receiving representation regarding that. Let me say that CESS is imposed for a particular purpose. CESS can be for the purpose of, say, health, CESS can be for the purpose of agriculture, CESS can be for the purpose of education. Compensation CESS, again, is a CESS, and it was imposed for a particular purpose. That was compensating the state in the first 5 years to ensure there is a certain percentage growth in their revenues on year-to-year basis. And that 5-year period was over in June 2022. After that, the compensation cess which is being collected is for the purpose of repayment of loan and interest thereon, which was taken during the period of COVID, because there was dip in revenue collections during that period. So I think in 2020-21, a loan of 1.1 crore was 1.1 lakh crore was taken, and in subsequent year 2021-22, a loan of 1.59 lakh crore was taken. For repayment of that loan, this compensation cess was taken and being collected. So whenever cess is discontinued, in past also cesses have been discontinued. So what happened in those cases? Actually, in those cases also, what was lying in the books could not be utilized because the levy itself has gone. Same thing has happened in case of automobiles also, or maybe wherever cess has been discontinued. It is not only automobiles, it is in case of aerated water, it is in the case of coal also.
Right.
So once the levy has gone, whatever credit is lying, it will remain lying in their books.
Sir, most of the people, right, last question or last couple of questions, most of the people that we've spoken to in the last 4 days have, like I said, I started off the conversation saying, "Ye dil mange more," everybody's saying, what's next? Now, I read about your comments that India will move to a single structure when income parity comes across. Now, that is maybe light years away. So between then and now, what else can be expected?
Yeah.
Not on the process, please, on the rates.
Presently, in this restructuring exercise, now it is 2-rate structure, 18 and 5. 5 has been kept a merit rate because our socio-economic conditions are such that for common man use items, we have to keep a lower rate. Once there is no need to keep a lower rate and only a standard rate is required, at that time, definitely another reform can be carried out by doing away with merit rate and having a standard rate. But I think that can happen, as I mentioned earlier also, that is there in some developed countries, not in all developed countries. So once we are in that position, that we can say for sure that everyone can afford goods equally, then we can have single rate. In fact, single rate will lead to another benefit. Then there will be no inverted duty structure, because till the time we have to keep some goods at merit rate, we will have inverted duty structure in those sectors. So that is inevitable.
Speaking on the inverted duty structure, do you think these measures which we have taken under GST 2.0 is going to resolve fully with the sectors like textile, fertilizers?
As I mentioned that till the time we have to keep certain goods, maybe textiles, maybe certain other goods at merit rate of 5%, their inputs all cannot be brought because inputs can be used across different industry segments. So the inputs have to be kept at 18%. And if you want to keep everything at one rate, as I mentioned, that inverted duty structure will go for all commodities once we have single rate. But that can be only in future, depending upon the socio-economic conditions in the country.
Last question, sir. I had to ask this about the additional levy, lot of chatter around it, over and above the 40% special rate on tobacco. Is there any talks on that? Is there any measure under consideration?
The central government stand is that on the sin goods, tobacco products, the tax incidence will not be lowered. So the the room which was available under GST law was that 40% can be the maximum rate. So up to 40% GST Council has recommended on tobacco products, sin goods. Beyond that, yes, there will be a levy under the constitutional provisions, so the tax incidence does not come down.
Sir, I must say, on behalf of a lot of people who look at markets and economy very closely, they are lauding this as one of the most landmark reforms that have happened. So kudos on doing this the way you have, and thank you so much for coming to the GST Conclave and talking to us.
Thank you, Niraj. Thank you, Shrimit.